If you're a creative, a freelancer, you know the feeling, right? You pour everything you have into your work, and then tax season rolls around and just takes a massive bite out of it. It is so frustrating. But what if I told you the tax code wasn't just your enemy? What if it could be a tool you could actually use?
And this right here, this is the whole secret. You have to get this in your head. You're not just making art, you're running a business. Every single thing you do, every brushstroke, every video, every client email, it's an act of entrepreneurship. So it's time to start acting like it.
Exactly. The system is actually built with all these little pathways designed to help small businesses. And guess what? That means you. This isn't about finding some shady, sketchy tricks. No. This is about learning the rule book so you can play the game the way it was meant to be played. And that's what we're going to do right now. We are going to unlock 4 totally powerful, and let me say it again, perfectly legal strategies that are basically hidden in plain sight in the tax code, made for people just like you to help you keep more of your money.
Okay, first up, let's talk about the space where all the magic happens. Your studio, your office, your creative corner. We're talking the Home Studio Deduction. And honestly, it's probably one of the biggest and most overlooked tools for creatives. This thing literally turns a piece of your biggest monthly bill, your rent, into a huge tax break.
So here's the one big rule you gotta follow. It's called the exclusive use rule. The IRS is super clear on this. The space has to be used only for your business. So no, your couch that you sometimes answer emails from doesn't count. But, and this is key, it doesn't have to be a whole room. That dedicated corner in your apartment with your desk, your computer, your gear, that totally counts as long as you use it regularly for your work.
Now, you've got 2 ways you can calculate this. The simplified method is, well, it's simple. $5 a square foot, you get up to a $1,500 deduction. No receipts, no headaches. It's awesome for beginners. But if you want to maximize this, especially if you live somewhere expensive, you got to look at the regular method. This is where you calculate the exact percentage of your home that's your workspace and then deduct that same percentage of your actual expenses. We're talking rent, utilities, insurance, the works. It's more paperwork for sure, but the payoff can be way, way bigger.
And look at this. This is what I'm talking about. Take Mia, an illustrator from the source material. She used that regular method for her little 15-square-foot studio nook. By deducting a piece of her rent and utilities, the result was almost $900 back in her pocket in 1 year. That's a new drawing tablet, that's software for a year, that's real money. All right, secret number 2. And this is for all my fellow gear hoarders out there. You know who you are. All those lenses, that software, the microphones, the art supplies. The tax code doesn't see that as a fun collection. It sees it as what it is, essential business tools, and it lets you get paid back for buying them.
And just look at how much this covers. It's wild. Your Adobe subscription? Deductible. That brand new camera? Deductible. The online course you bought to sharpen your skills? Yep, deductible. You can even write off the coffee you buy when you meet a client, as long as you document it. The list just goes on and on.
Okay, now here's a nerdy tax term that's about to become your best friend. The de minimis safe harbor. It sounds super complicated, but just think of it as the $2,500 rule. It basically means that for any single business purchase under $2,500, you can write off the entire cost in the same year, instantly. No complicated math, no waiting around for years. It's a game changer for simplifying your expenses.
So what about the really big stuff? You know, the pro-level camera, the beast of a computer that costs more than $2,500? Well, that's where you unlock a real superpower called Section 179. Instead of having to deduct, say, a $4,000 purchase over 5 years, Section 179 lets you deduct the full $4,000 right now. A podcaster we read about used this to save over $1,000 in taxes on new equipment in the very first year.
Okay, this next one, this one's my favorite. It feels like a true, bona fide insider secret. It's called the Augusta Rule, and it is a 100% legal way to move money from your business account straight into your personal pocket, completely tax-free. Yeah, you heard me right.
So here's the play-by-play. It's actually pretty straightforward. For up to 14 days a year, you can rent your own home to your own business for a real business purpose. Think a photo shoot, a client workshop, a big planning session. Your business pays you a fair market rate, whatever the going rate is in your area. Then your business gets to deduct that payment as a business expense. The key, the absolute most important part, is you have to document everything. And this is where the magic happens. Check out Jordan, the YouTuber. She rented her home to her own company for 10 days to shoot a bunch of videos. The business paid her $3,000. That $3,000 was a deductible expense for her business, which lowered its taxes. And then, here's the amazing part, she personally received that $3,000 and paid zero personal income tax on it. It's an incredible win-win.
All right, our last secret. And honestly, this one might be the most powerful for your long-term wealth. For freelancers, retirement accounts are not just about saving for when you're old. They are the single biggest tax deduction you can probably take right here, right now.
See, when you're self-employed, you get access to these amazing retirement plans. The two big ones are the SEP IRA and the Solo 401k. The SEP IRA is super easy to set up, great place to start. But the real powerhouse, the one you need to know about, is the Solo 401k. This is where you get to play both roles. You're the employee and you're the employer, and you can contribute as both. It lets you turbocharge your savings and your tax deduction. Let me show you what I mean.
So check this out. As the owner of your business, you get to wear two hats. You're the one doing the actual work, right? That's the employee hat. But you're also the boss running the company. That's the employer hat. A Solo 401k lets you put money in from both sides. So a designer named Sam can put in his share as the employee, up to the max. And then his business, which is also him, can contribute another chunk on top of that as the employer. It's literally like getting a company match from yourself.
And what's the result of this incredible power move? Well, by maxing out his Solo 401k, Sam lowered his taxable income by almost $40,000. That translated to a direct tax savings of over $9,500 for 1 year. That is a huge number, and it all went toward building his future.
Okay, so we have 4 amazing strategies. The most important thing now is this. Using these tools means you have to be ready to prove you're using them right. The best offense is a good defense, and when it comes to taxes, your best defense is amazing records. So this is your final checklist. This is how you do it safely. Keep every single receipt. Scan them, digitize them, use bookkeeping software, please. And this one is not a suggestion, it is a rule. Get a separate bank account for your business. It makes life so much easier. Track your mileage automatically with an app, and maybe most importantly, find a CPA who actually understands the creative world. They will be worth every single penny. Because in the end, that's what this all comes down to. These aren't just tax tips, they are business strategies. When you start embracing the entrepreneur part of your creative life, you give yourself the power to keep more of your own money, to reinvest in your craft, and to build a career that's actually sustainable. You've got the secrets now. The real question is, what are you going to build with them?